we discussed the impact and the recording of assets. Now let's see how to record the other elements also. Liabilities. Unlike the assets, when liabilities increase, we record it in the credit side. We record it in the credit side. When liabilities increase, we record it in the credit side. And when liabilities decrease, the opposite, debit side. Equity. Equity is similar with liabilities. When equity increases, we record credit side. Decreases, debit side. Then income. When income increases, we record it in credit side. And when income decreases, we record it debit side. Expenses is similar with assets. When increase, it is debited. When decrease, it is credited. So, assets and expenses record similarly. That means when they increase, we record it in the debit side. When they decrease, we record in the credit side. And liabilities, equity, income, these three are similar. That means when increase, we record it in the credit side. Example, sales income. If we receive a sales income, we record it, put a date. Sales income will say cash sales 10,000. So, the other account is cash. Cash account 10,000. Like that. When the income balance increases, liability balance increases, equity balance increases, we record it in the credit side. And when it is decreased, we say repayment of bank loan. We are paying the part of the bank loan. We are paying 5,000 from the bank loan. We are paying in cash. Put a certain date. The other entry is in cash account because we have to pay in cash. Then cash decreases. Cash account 5,000. Like this. When we are repaying the bank loan, it is decreased. When decreased, it is recorded in debit side. Here, income increased. The sales amount increased. Therefore, we recorded it in the credit side. So, assets and expenses are similarly recorded. That means when increase debit, decrease credit. And liabilities, equity and income are recorded similarly when increase credit, decrease debit. Now we'll see some exercises related to this topic. Okay, my dear students, now focus on your screen. There is a sum and we are going to discuss it. Mindy, who worked as a baker for several years, started her own bakery on 1st of May 2020. Transactions taken place during the first week is given below. 1st of May, investing capital in cash 100,000 and a building 500,000. Investing capital in cash. Therefore, there are two impacts, cash and capital. Cash increases, capital increases. And also, she is investing a building. Therefore, another asset is increasing. In the transaction, investing capital in cash 100,000. Let's record it first. To record the impact of transactions, you need to have separate accounts for each impact. Therefore, you have to draw ledger accounts. In here, I have used the T format or T account. But you have to use the descriptive format. That means the format with date, description, value. Let's see the first transaction. To record the first transaction, we need a cash account and a capital account, because the two components that are affected by this transaction, that means investing capital, is cash account and capital account. The date is 1st of May. Investing capital in cash 100,000. So we have to open up a cash account. And I told you cash is an asset. When assets increase, we record it in the debit side, the left side of the account. Therefore, I have recorded here the date, opposite account, the account where the other entry is, capital account 100,000. Okay, date, the other account that is impacted, and the amount 100,000. Now, cash is received through capital. Therefore, we have to record the other impact. There are two impacts, one for cash account, one for capital account. Now, we have already recorded the cash account, and now we have to move on to the capital account and record it. Just like the cash account. 1st of May, the other entry is in cash account. Amount, the same amount, 100,000. Because we have recorded this in the credit side. In the previous note we discussed equity increases we record in credit side. Therefore, asset increase we recorded in the debit side, and the equity increase we recorded in the credit side. Therefore, you can see very clearly both accounts are balanced. One entry is in the debit side of this account, and the other entry is in the credit side. Just like the scale, one entry is in this side 100,000 debit, the other entry 100,000 credit. The scale is balanced. If you can't remember the sides yet because you are new to this matter, you can put it like this: credit and debit for debit side, like this, just to remind the sides. So, in this transaction now we have completed both entries, debit entry and the credit entry. That means two sides of the transaction. But there is another section of that transaction. The owner is investing a building worth 500,000. So, we have to open up a separate account for building and record the transaction just like the cash account in the debit side, because building is an asset. When asset increases, the entry goes to the debit side. So, let's see how it's done. Just like the cash account, building account, the entry is passed on the debit side as capital account 500,000, because the other entry of this transaction is recorded in the capital account. Why we record it as capital? Because the owner is the one who is investing the building. We are not purchasing it. We are not spending cash. The owner is the one who is bringing that asset to the business. Therefore, this building account is debited by 500,000, asset increased, debit. Building, which is an asset, increased, therefore we record it in the debit side, and capital is, which is equity, when increased we record it in the credit side. And next transaction, purchasing flour and raw materials 20,000 rupees. Raw materials, the things required to start the production. That means inventory but to use in the production. When purchasing inventory to use in the production, we call it as an expense, which is purchases. Purchases. So we have to open up another account, purchases account. My students, remember, when you're purchasing anything, you can't record in this particular account. Because in purchases also there are two segments. Purchases, there are two parts. Inventory and assets. These are inventories are to be purchased to resell or use in the business. Okay? To resell, that means like electrical appliances or motor vehicle parts. We purchase it from a manufacturer or a second-hand dealer or a first-hand dealer. Then we sell it to another party. We don't make any adjustments or differences. We just purchase it from another party and we sell it to another party. That is the purpose of reselling. And to be used in the production, the second option is used in the production. That means we are using some raw materials and we are manufacturing something. Just like this example. She is purchasing flour and other raw materials to make bakery products, pastries, buns or whatever. Like that, purchases has two options, inventory, just like I explained, and assets. Assets are clearly the things, resources and valuable things purchased to be used in the business. Therefore, you can't record asset purchases inside this account, because in this account we record only the inventory, either purchased with the purpose of reselling or with the purpose of using in the business production. And assets, when we are purchasing asset, although the word is similar, the impact is not. Assets which are purchased to use in the business, we have to record in separate accounts like building. Building, and you can take furniture, motor vehicle, like that. Because they are assets. And these inventory purchased to use in the business are considered as expenses, because these purchases are made in order to earn an income. They are not using in the business to take benefits. They are used to earn an income. They are spending. Therefore, in this purchase account, remember, you have to record only inventory purchases which are used to use in the production, and not assets. You might have given purchasing of a building, purchasing of a furniture, but you can't record those things inside this particular purchase account, because you have to open a separate account, because those are assets. And in here, inventory, those are used in the business purpose, are expenses. That means we are spending. We are considering that as an expense because we use them to earn an income. Okay. Now purchases account we have opened, and the value to 20,000 rupees. 20,000. Purchases is an expense. Therefore, you have to record in this side. Date 2nd of May. It is on cash basis because they haven't mentioned whether it's credit specifically. If it is credit, you have to mention it specifically. Therefore, 2nd of May, cash account, the amount 20,000. And the other impact. Now here, the expense increased. Therefore, we record it in the debit side. And the other impact, cash decrease, because in order to purchase something we have to give cash. When we are giving cash only we receive something. So, the other impact is going to the cash account, but not the debit side, the credit side, because the cash amount is decreasing. Cash is an asset. When asset value is decreasing, we record it in the credit side. So, 2nd of May, purchases 20,000. 2nd of May, purchases 20,000. Now, the accounts are balanced. One entry goes to the credit side, other entry goes to the debit side. Always when you are recording a transaction, you have to check whether one entry is passed to debit side and the other entry is passed to credit side. If you can pass those two entries only, the transaction recording is complete. Therefore, always check whether there are two entries in the either sides of an account. Next transaction, purchasing bakery equipment 30,000. Bakery equipment to be used in the bakery to produce. Therefore, it's an asset. So, we purchase bakery equipment spending cash, and bakery equipment is a separate asset. Therefore, we have to open another separate account for bakery equipment. Bakery equipment account. How much is the amount? 30,000. On 3rd of May, they have purchased 30,000 worth of bakery equipment. $30,000. So, they are spending cash, and then you know the next entry comes to credit side of the cash account because they are spending. Date 3rd of May, bakery equipment. Bakery equipment account. 30,000. Now, the double entry is completed. One debit entry, one credit entry. So, bakery equipment is an asset when increase debit side. Cash is also an asset when decrease credit side. Next entry, obtaining a bank loan 100,000. When obtaining a bank loan, we receive cash and also we create another liability, bank loan. So, when we receive cash, the asset increases. Therefore, debit side of the cash book. And liability, there's a new liability. So, we have to open up a new account for the new liability. Bank loan account. Bank loan account. How much is the bank loan? 100,000. Bank loan is a liability. When liability increases, credit side. The date is 4th of May. We receive cash. Therefore, cash account. $100,000. And this is the credit entry. The missing entry is debit entry. The debit entry goes to cash account. Let's see how it's recorded. We are recording the other entry of bank loan account in cash account, which is in debit side. So we are moving on to the next transaction. 5th of May, purchasing furniture 40,000. Furniture is an asset. When asset increasing, we record it in the debit side. Therefore, 5th of May, we purchase it using cash account 40,000. If the debit entry is in the furniture account, the credit entry should be in cash account. 5th of May, furniture account 40,000. Now the debit entry and the credit entry is complete. Next transaction, 6th of May, sales income 5,000 in cash. Sales income 5,000. I have already recorded in cash account 6th of May. Sales income, therefore we have to open up a sales account. Where is a separate account? Sales account. 6th of May, sales account, how much? 5,000. I debited it into cash account because we are receiving cash. And sales is an income. Therefore, when income increases, it's credited. 5,000 is credited in the sales account. 6th of May, cash account 5,000. Now the debit entry and the credit entry is completed. Last transaction, 7th of May, credit sales 10,000. Credit sales. Credit sales means we are selling goods with the agreement of the debtor to pay on a later date. In the results of a credit sale, we get a new asset just like our accounting equation, debtors. Debtors account. So, we have sales 10,000. We have sales 10,000. Debtor, which is an asset, on 7th of May, sales account. We are making sales. Sales account, how much? 10,000. And also we have to record it in the sales account. 7th of May. The other entry is in debtors account. $10,000. Okay. Now our debit entry and the credit entry is complete. But our accounting is not yet completed. We have to close this account. That means we have to total these accounts and obtain the final value. Here in the cash account, you can see there are two columns. One side we record cash receipts, the amount of cash we got, and the other side we record how we spent. How we spent the amount of cash we received. Therefore, we have to check how much we have left in the business. We received some amount of cash and we spent some amount of cash, and finally we have to check how much there is to use in the business or retain in the business. For that, you have to check which side is higher. In this account, which side, the amount column, which is the highest amount column? This one, the debit side or the credit side? Let's see roughly. Here 100,000, 100,000 and 5,000. That means 200,000 and 5,000 is there. Clearly 200,000 is there. Then here 20,000, 30,000 and 40,000, all together 90,000. So you can see there is a 100,000 there, but all in total this side 90,000 is the total. Therefore, we have to check which side is higher. Now, we concluded the debit side is higher. So, we have to take the debit side total to both sides. We have to take debit side total for both sides. Let's see how we do that. Here we got the total 205,000 here and 205,000 here, the total of the highest side. We have to put it in the both sides like this to find the difference, to find the amount remaining with us. So, we have to compare the gap between these three numbers and the final value. That means 20,000, 30,000, 40,000, all together 90,000. The meaning of this is we had 205,000, but we spent only 90,000. We had 205,000, but we spent only 90,000. So, the remaining amount is 115,000. How did I take it? You had to deduct this total from the total of debit side, the highest side. You have to reduce the lowest side total from the highest side total. Here the highest side is debit side in the cash account. The total is 205,000. So I recorded it in the both sides to compare. This is the highest side, the total is 205,000. 205,000 is there. And I have to compare the total of these values and this value. That means I received 205,000 by various means, capital, bank loan and sales account. And I spent 90,000 out of that. I spent 90,000 out of that for purchases, bakery equipments and furniture. Therefore, I only have 115,000 left in my hand. Or in this case, Mindy's business. Mindy's business only has 115,000 out of 205,000 because they spent 90,000. So, this value here, we call it balance carried down. What is this? What is balance carried down? That means we are taking this balance to the next accounting period. We are taking it down to here, this place, 115,000. This 115,000 we call balance brought forward. From here we are taking to here, because this is the meaning of this is we are taking the balance from one accounting period to another accounting period. we are closing, that means we are totaling these accounts at the end of the period. Therefore, let's say now we took May, month of May. So, we are totaling this at the end of May. At the end of May. Then, we are taking this balance to the beginning of June. We are taking this closing balance, the end of the balance, to the beginning of the next month, next year. That is why we call balance brought forward and balance carried down. We took the balance from this current accounting period to the next accounting period. So just like this account, we can close all these accounts. Now I'll show you how to do this account, bakery equipment account. After I showed you how to do 2 or 3 of these accounts, you have to try all the accounts by yourself. Now let's see bakery equipment account. I chose this account because there's only one entry in one side. Here we had both sides filled with entries. But here we have only one entry. It is also in the debit side, only one side. So, what is the highest amount? Which side carries the highest amount? This side, 30,000, because this side is 0. So, we have to take this 30,000 to both sides. 30,000. 30,000. Here, the balance is 0. Therefore, if we deduct 30,000, like our previous example, if we deduct 30,000, we have to deduct this side value. That means 0. The answer will be 30,000, the same. So, balance carried down. In short form, we write it like this, BCD, balance carried down. So, what is the balance carried down? The same amount, because you don't have any transactions this side to deduct or adjust. Therefore, balance carried down also the same amount. And balance brought forward also the same amount. Now, think like this. Understand the theory behind this. This is not just numbers throwing here and there. The meaning of this figures are, you have 30,000 equipment by 3rd of May. At the end of the period also, you have the same amount of equipment because you didn't sell any or buy any. You didn't sell any equipment or you didn't buy any equipment. Therefore, you have the same equipment you had. Just like this. I have this pen with me. I have this pen with me. Now I don't have this pen. I only have this pen. So, on the first day of the month, I only have this pen. At the end of the month also, I only have this pen. Otherwise, if I throw it away or I bought a new one, I have this pen at the beginning of the month and the end of the month. And the end of the month, I might throw this away after the ink is used, or I'll purchase another one. So, this is the same scenario here. At the beginning of the month also you had the same equipment. At the end of the month you didn't sell, you didn't buy any, so you have the same balance. And this account, here we had a debit balance, here we have a credit balance. So let's see how these two are balancing. Highest side, always highest side is, now this account, the highest side is this side, 100,000. this side has no balance, 0. Therefore, just like this one but opposite. You have to put this 100,000 for both sides. And here we put balance carried down to this side because this side is empty. Therefore, in this account, balance carried down must come to this side because this side is the lowest side. Just like the previous example, this side is 0. Therefore, the same balance and balance brought forward also 100,000. What's the meaning of this? On this date, you bought or obtained a bank loan. You haven't paid it yet. You haven't repaid. You haven't obtained another account, bank loan. Therefore, the balance remaining the same. At the end of the accounting period also, the balance is same because you didn't pay any or you didn't obtain another loan. So, I hope you understood the lesson. We discussed about double entry, the dual impact of transactions. Dual impact of transactions means every transaction has two aspects. That means a debit entry and a credit entry. So, we learned how to enter these transactions into the ledger accounts and the format of an account. So, you have given many exercises in your textbooks and past paper books. You have to do this exercise, the very similar exercise by yourself, and you have to complete all these accounts I have left. It is your exercise. You have to complete all these accounts I have left here, and you have to learn it by yourself. Let me tell you something. When I was doing O-levels, when I was in grade 10, I was doing really well with business studies. I was getting higher marks and I was writing the answers in a bright way. But as soon as accounting started, my marks gradually started to drop and my teachers were not very happy with me. So I started to find the reason for this. My habit is, when we are doing business studies, I have a pretty good memory. So I memorize everything the teacher teaches and I read the books and all these things I can remember. And I tried the same scenario, the same method with accounting. I just looking at the board when teacher is teaching, I was copying down all the notes and I was copying down all the ledger accounts. And after going home also, I was just looking at them but not doing anything. So I thought, by my age is 15, I thought I can do accounting just like the business studying part, just like by observing, just like by reading. That was the reason my marks were dropping. So when I'm searching, I understood that I can't do accounting like this. I can do business studies like that because I can memorize, I can write very well, I can read and understand. But accounting, my students, you can't do that. Accounting is a subject you have to practice. You have to practice always. Although we did only 1-2 calculations here, because of the time we have, you have to do it continuously. Otherwise, you are getting to forget these theories and concepts. And another thing is, don't try to learn by heart what is in accounting. Accounting, you have to practice, do it regularly and take it to your blood. Then only that is coming to your pen. So, when my marks are dropping, what I did was, I was practicing continuously. I was making the calculations, exercises, and I did everything by myself. Until that, I didn't understand anything teacher taught. She was saying this is debit, this is credit, like that. But I didn't understand a single thing because I was focusing on the theory but not on the practice. Therefore, there's only one thing that you can go through accounting or you can success in accounting, that is practice. At least you have to make the same calculation 3 times. Then only you get the practice, you will understand. Otherwise, you won't understand what is in the sum, what is in the exercise. So, if you practice, before you read in the calculation even, you might understand what are they are going to ask. What they are going to ask. What is the question? What will be the question? And what are the probable questions? So, my dear students, keep in your mind, always practice, do the exercises. Don't wait for teachers to do it for you. You try it first and then you show to teachers.